So hello guys, here was a sweet trade that I actually had from on Wednesday to Thursday, which is I placed this trade in the evening of Wednesday and I had it across Wednesday to Thursday, and I actually hit a very huge 1:3 ratio. Like for example, I risked just $100 to make over $377 in this particular market. So earlier on, I posted all the results on my Telegram channel where I actually do drop signal once in a while, but now I drop more signals on my WhatsApp channel. But then I'd post the result and everything on my Telegram channel. But then I was wondering what will you gain from it if I just show you the result and not show you how I actually come about that particular result. So that's why I created this video that will fully contain every single analytics I do on this particular market and why I came up with my idea to actually place this order here. And then when I placed this order, there were so many drawbacks during the market movement, but then I still stick to it, and I'm going to tell you every single thing that gave me the mind to actually stick to it, so you also will learn how to trade yourself, so that when you see this sort of movement in the market, you also know how to trade it. So this market here was actually Australian dollar versus Japanese yen, and you can see that I actually did a 3.77. You can see risk to reward ratio is 3.77, and you can see that I placed the trade, and you can see the date displaying below the screen here. The trade was placed on Wednesday, January 31st, and then I had it up to Thursday. Like, okay, so here's when the market was confirmed, and it was on Thursday, 1st February 2024. You see how long I actually had this trade, and trust me, this is how, when you see a profitable trade, you don't get out of the market, you wait for it to actually complete. So I had this trade from on Wednesday to Thursday evening, where it actually hit my take profit. So now let me just go on, and then there's still another trade that I'm currently holding, which I'll be showing you at the very end of this video. So I'll go back to that one later on. So for now, let's take a look at this particular market. So now when I came onto the chart, I look at the market, Australian dollar and Japanese yen. And then what I did was that I came over to the daily time frame. Yes, I'm a day trader, but I use the daily time frame to see the higher range of the market. So after coming over to the daily time frame, one thing I did was I marked my most clear support areas. So then I also consider this one here. The reason why I consider this one here is that there was some minor movement over here, but this support area was getting really clinical because I made the market at this area here. So I made the market around this area here, which is this candlestick here. That was what I actually made the market. So I don't use bar replay. If you've been following me for a while, you know that I don't use bar replay. I actually show you the real things and how I'm doing it. So after meeting the market at this point, I just went on to the daily time frame and then get all of my zones out and clear enough for me to see. So let me just close it up. So I got my double support areas here, and then so the reason why you see that I'm having double support is because this support below here, I don't really consider it that much. So I'm just going to change the color like I used to do in my trade. I change the daily color to blue and then use the hourly one as yellow. So this is how I normally do my trade. So after I marked it up like this, the next thing I did was that I observed the market movement. And if you should look at the market carefully, you can see that this area of support, this minor area of support, is gradually turning a resistance here, which is this clear resistance area here. And then this one, I clearly know that from my knowledge of market structure, I know that if this top here is the daily time frame for a resistance area, then this mid level here will be the hourly time frame. So I'll just give it a yellow color as well. So let me just give it a yellow color. So after that, I came over to the 4-hour time frame, which is the time frame I prefer placing my orders. So after coming over to the 4 hours time frame, and then here's what thing I did. I normally draw the market together. If you already know me, you know that. So after bringing the whole market together, I spotted an uptrend here. So the market was actually going upwards. So I spotted the uptrend up to this level here. So I just marked my area like this. So after marking my area, so ascending triangle is one of my favorite trading patterns. I use for both buy and sell orders. So now let me get everything right. So something like this. Okay, something like this, yeah. So this was what I drew. So after getting this ascending triangle out, my main aim was that if the market should come back, like the market was at this point here, let me draw it out. So the market was at this point here. So at this point here, I had double options. My first option was that, okay, this is not really clear. Let me give it a very vivid color. So at this particular point here, I had double options in the market. My option one was that I'm waiting for the market to actually break above here, come back for a retest, and then show a sign of rejection. Then I was going to buy the market. But then I waited and waited. I didn't get any sort of movement to the upside. And what I saw next was that. So what I saw next was a very big. So what I saw next was a very big bearish candle. Let me just zoom out. So after waiting for this area for a bullish candle, I did not get any that was showing any sign of breaking above the resistance area. So the next candle that I actually created was this big bearish candle here. You can see. And the moment this big engulfing candlestick actually break below this trend line here, which is this line below here, this yellow line here, immediately broke below this ascending triangle line. I knew that the market was ready for a sell position, but then I did not rush into the market. The reason why I did not rush in the moment I saw this one was that, for example, if I had rushed into this market, let me say I rushed into this market and placed the order here, my stop loss would be just above this line here, because when I'm using the ascending or descending triangle, my stop loss, I just place it above the triangular line there. Then I would have placed it like this and then taking my take profits, my take profit 1 here and my take profit 2 way down here. But then I realized something, and this is what actually happened, and I learned this thing through back testing. The thing I learned was that whenever you see a break below your trend line or any of your confirmation line, don't be in a hurry to place the trade until you get extra confirmation. And my extra confirmation was waiting for the market to come back to retest the trend line again and then give me a sign of rejection. So the market truly did that. After it came here, it got to this area here, moved back upwards to this level here. It went back into the triangle, the ascending triangle, but then it created an indecision candlestick. So for those of you who don't know indecision candlestick, here is how indecision candlestick looks like. So let me draw it here. An indecision candlestick look like this, a body like this, and then it has a very long wick on both sides. So a candlestick that looks like this is known as the indecision candlestick. It doesn't show which part exactly the market is going. So immediately I sighted this candle, I knew that okay, the buyers and the sellers are about to make a final decision. So I patiently waited and waited, and the moment the market broke below the trend line again with a very bearish candle, so it broke below here. So I was expecting it to break below this indecision candlestick. Then the moment it broke below the indecision candlestick, that was when I actually placed my order here. And so I had this trade from on Wednesday up to Thursday evening to actually get out of the market, because that was when it actually hit my take profit. So originally I saw this place as take profit 1 and take profit 2, but one thing I do is that once I get a very good either 1 to 2 or 2 to 3, I no longer expect any take profit 1 and 2 again. I just get out of the market. So immediately got up to my 1 to 3 7 ratio, which is the initial ratio I set. I just got out of the market with immediate effect, and you can see that the moment I got out of the market, it broke below and then took an instant reversal back in again. And this one, whenever I get a good profit, I just close it off immediately, because the market is not owned by me, not owned by anyone. So this is simply how I was able to close a very sharp 1:3.7 ratio in the market. So when this trade was going, the truth is that this trade did not just go straight up like you see it on a 4-hour chart. It did not just go straight up like that. There were so many candlesticks coming and going in the market before it actually got here. So if you should look at it carefully here, you can see that the market from here, it fell to this level, came back to this level, came here, went back upwards, and then finally took the final decision to come down here. So if you are a trader who doesn't have enough patience to actually look into your market when trading, then you are likely to fall into this sort of trap. So when you are trading, here's my advice for you. When you place an order, I advise you watch it with a higher time frame. So when I place an order, I hate looking at it on the 1 hour and the 15-minute time frame. I prefer looking at it on the 4-hour time frame. That's more especially if I place the order on the 4-hour time frame. So if I use my 4 hours time frame to actually place the order, I look at the market movement on the 4-hour time frame. And if you should look at the 4-hour time frame here, let me go back to the 4 hours. And when you look at it on the 4-hour time frame, what do you notice? You will notice that there's no huge drawback in the market. But then when you use the hourly time frame, you see so many back pulling in the market, and those ones will actually threaten you to get out of the market. So since I used the 4 hours to make my final decision in the market, I patiently waited for the movement to happen on the 4-hour time frame before I got out of the market. So that is simply all about my Australian dollar and then Japanese yen trade. So earlier on, I promised you that I was going to show you one of my trades I currently have running. And this trade, you can see it on your screen. You can see the snapshot on your screen right now when I actually drop the signal. Drop it around 5:38 a.m. and I drop a very full information on everything about it on my WhatsApp group, whereby I have a trading team where we trade together and do things together. That's where I actually drop the signal. So now let me actually show you the market. Chef JPY. So now let me just spot it here. Okay, here this is it. So this was the market on Chef JPY. So this one also was something really similar movement. You can see it was a ranging market. So I patiently waited for the market to come and retest this area and then give me some good bullish movement. And you can see that the first bullish movement he gave to me, I did not execute the order immediately, which is this one here. So he gave me this first signal here where I refused to place the order. This is because that candle was an indecision candlestick. This is the importance of reading candlestick. So whenever I see indecision candlestick, whether it's been a bearish or bullish, I don't place an order until I wait for the next one. So what actually happened next was that the market then printed this this bullish candlestick. It printed this bullish candlestick, and then the moment it printed this bullish candlestick up to this area here, I got into the market immediately, and you can see that the market moved upward, got to this level here, and then it immediately pulled back down again. So here's one thing I normally do when I see this sort of market. When it pulled back down, if this was a full kangaroo tail, which is a hammer, so I don't know how some of you identify. I identify all as a kangaroo tail. So if this was a full kangaroo tail whereby there was no wick at this other end, I would have gotten out of the market immediately to avoid getting out of the market. But then since it wasn't created, it didn't create any sign of rejection, I patiently waited, and you can see that the market traded almost into my stop loss area. And this is one thing I talked about in one of my YouTube videos, that when you are trading, don't be in, like, don't place tight stop loss. Tight stop loss will actually get you out of the market. Take a look at this market here. You can see that here was the support area, and then take a look at where I actually kept my this is where I kept my stop loss. The reason why my stop loss was this high was because of this wick here. So now let me get rid of my drawings so I can actually see the wick I'm talking of. So now let me drag this to the side. Let me bring the market together so I can drag it to the side actually. Okay, so I locked it. So I normally lock it so I don't get to move it easily. So see, immediately it printed this one. So I was entering at the top of this candlestick, so I had to put my stop loss below this one so that in case the market should come for a retest, it won't test it. And truly you can see that the market moved, and what did the market do? The market eventually came for a retest at this point. You can see the retest. It came back to a retest in this market area again, and this was because I gave my stop loss a lot of room. I was able to stay in the market. So for example, if I had placed my stop loss at this area before, when the market pulled back, what I would have gotten out of the market, and look at the profit I would have lost, just because I wanted to make a 5:1 risk to reward ratio, and you can see that it would have been a red market for me. But then I was smart enough and then remove greed aside, and then just aimed for a 1 to 2.9, and then actually you can see I'm currently in the market and it's still roaming. I'm not going to close it until tomorrow afternoon. So for me, I don't like my trade closing with the market. Like tomorrow is Friday, which is the today right now. You can see I'm recording this video on Friday. You can see today is 2nd February 2024. You can see it at the side there. So I'm recording this video on 2nd February 2024, and that's on Friday. So during 2 to 6 p.m. Ghanaian time, or I said 2 to 6 p.m. I won't keep to that on Friday. So within 2 to 3 p.m. Ghanaian time on Friday, I'm actually going to get out of the market. Whether I'm in profit or I'm in loss, I'm actually going to get out of this market. So I don't like holding my trade across the weekend. I'm a day trader. The reason why I hold trade across this recently is because market movements aren't really that effective recently. There is a huge ranging market going on. So for you to make a good profit, you have to hold your trade for a bit longer time. That's why I hold my trade longer these days. So that's simply all, and I hope you get to understand how I make my analytics in this market. So for this particular market, I don't have to explain my analytics to you. If you watch my previous video, which is displaying on your screen right now, then you should actually know why I took this trade, because you can see the channels I drew in this market. You can see the areas I drew here. You can see this blue line going across here. This blue line was actually my direction in the market, and I use it for my confirmation, and I got it right, and I'm currently in the market. So hope you find this video helpful. Don't forget to smash that subscribe button, like this video, and from next week I'll be doing a steady live streaming, and you can also join my Telegram channel, which will be linked down in the video description. So with that already said, have a nice day. Bye.